It's Friday the 15th, I'm FX Blue and this is CurrencyTransfer.com's market update. So the headlines today are that the ECB is to end quantitative easing by the end of the year. Sterling falls despite strong retail sales and the dollar gains on widening interest rate differentials. So in line with comments made earlier this week, yesterday the ECB announced that they will wrap up their asset purchase scheme by the end of the year. However, in the press conference, Draghi said that short-term interest rates will stay on hold until at least next summer due to uncertainties in the Eurozone economy, presumably a casual nod to the massive debt overhang that remains and data suggesting that the economy is beginning to slow. However, as the US Eurozone interest rates are set to widen further, we saw some big euro moves on the back of this yesterday. Initially, euro did rally on the quantitative easing news and euro dollar touched 118.50, but those gains were quickly reversed when Draghi took to the stage and clarified his interest rate policy, and euro dollar dropped to a low of 115.60, where it has stayed overnight. Net euro lost about 1.9% on the day and reached its lowest level since May the 30th. Domestically in the UK, retail sales were unable to light a fire under sterling following 2 months of poor numbers blamed on the unseasonably bad weather. There was always a good chance of strong data in May, and yesterday did not disappoint. Retail sales grew by 4.4% in May, well above the forecasted 2.5%. Sterling euro did move a little higher on the news, up to 114.65, but a cable was held back by the Brexit negativity and the growing US-UK interest rate differential. So the dollar has been the star performer this week and does end the week on the front foot. The week kicked off with the Trump-Kim summit in Singapore, which boosted the global risk appetite and benefited the dollar. Then Wednesday saw the hawkish rate hike from the FOMC when they raised interest rates and committed to 2 more rate hikes this year. The dollar index touched 94.94 yesterday, the highest seen since November, and next week has got very little on the calendar, so the dollar is expected to remain fairly firm. Trump is expected to make a decision on his Chinese import tariffs next week. And while the president remains focused on making America great again with foreign policy wins, it's domestically that the dollar is receiving most of its support right now. So perhaps time to refocus slightly, Donald. Anyway, we'll keep you posted with anything relevant. Otherwise, have a great weekend.